Hello. Okay, in this video, we're going to take a look at something that I get asked all the time. Is the MLI Select program actually worth it? Is having a 50-year mortgage, what are the pros and cons to that, of course? Is having a 5% deposit, what are the pros and cons to that as well? In this video, we're going to compare a traditional real estate investment with an MLI Select investment. Okay, so I'm going to go step by step. I'm going to show the numbers because that's what real estate investing is all about. Make it a little technical at times, but I feel like that's important again in showing the actual numbers, how we come up with these numbers, and that we're trying to be conservative on our actual calculations here. So let's start. So traditional real estate investment. For a traditional real estate investment, you have to make a 20% deposit. So that is a requirement, 20% deposit for traditional. That's where MLI Select is so advantageous. Only a 5% down payment is required for an MLI Select investment. Now, the mortgage terms for traditional is 25 to 30 years. Mortgage terms for MLI Select is 50 years. So you get a 50-year mortgage. I also want to say the interest rate for MLI Select is currently lower than the residential interest rate. Okay, so you have an advantage there, which actually makes a huge difference in terms of the cash flow. Now, for the example today, we're going to look at the same project. So on the traditional side, there's two rental units. It's a half duplex with a legal suite. It's a 2-bed, 2-bath basement suite. This is a real project, by the way. That is an MLI project that is currently not available as they've all sold out, but one we've actually done in the past. So we're going to use this as our example. Now on the MLI Select side, it's 8 rental units, so it's 2 full duplexes with basement suites, okay? So let's scroll down. Now the assumptions here, it's the exact same property, the same rental amount per unit based on the current market rental prices. Now, I actually just checked, and the projections I'm using are $100 more than the actual unit. So as you can see here, $2,500, $1,600 for the basement, the exact same units that we're talking about here. In our projections, we are $100 above that. So take this with a grain of salt in terms of it's $100 more. Actually, we'd probably like to go a little bit less because we don't want to pick the most expensive in the market. But when I first ran the financials, this was a reasonable price. The rental market is softening a little bit. That's expected, and that's going to happen over the next couple of years. So try and be conservative when picking your numbers, but for the sake of this example, just know probably $150 less monthly cash flow right now. So let's look at the two pro forma types, which actually I think it's supposed to be connected as one word, but that's fine. We are going to start by looking at the MLI Select pro forma. The reason we start here is because there's additional cash costs that I want you to be aware of. So I'm going to break down the line items here in more detail than I will for the traditional. Now, the down payment, again, only 5%. So it's 4 duplexes, 4 half duplexes, upstairs and basement legal suite. $141,000 for your down payment. Now, looking at the traditional, it's the same, right? So for one unit, 20%, it's the same $141,000 for that down payment. Now, this is where the additional upfront costs come in. Is for the MLI Select, you have a mortgage broker fee. We have ours currently at 0.85 because we have a mortgage broker who does it for 0.85%. So it's $23,000. CMHC screening fee, $1,200. Appraisals and environmental fee, $6,000 to $6,500. Legal lender fees, 0.85, which we currently have as well, $23.97. Legal fees about $7,200. Total cash needed is $203,000. So that's about $60,000 more than you're going to need for your traditional investment. Okay. Let's see. Yeah. So you need $1,500 for legal fees, for $142,500 down payment versus $203,000 down payment. Now, let's look at the debt. So the total mortgage here is $2.679 on the $2.82 million price point. There's a CMHC fee of 2.8. So your total mortgage is 2.75. Interest rate 4%. 50-year amortization. Your monthly mortgage payment is $10,622. Then property management 8%. Property tax $1,500, insurance $500, repairs and maintenance 3%, we're looking at monthly rent of $16,800. Again, bring that down probably $200-300, $400 maybe at most right now, but still, regardless, it's above the $1,000 price point. But the point of this is, again, to show the side-by-side comparison with the same rental price. So regardless, it'll serve the proper purpose. Estimated cash flow, 1826. We also do think the CMHC interest rate, it was just at 3.75 recently, which then, even with higher or lower rental rates, it'll still be around here. So yeah, that's what we're getting. 1826 for 4 properties for 203,000 in, versus, let's move this, negative 465 monthly cash flow for traditional investment. Okay, so the mortgage 564, 4% interest, which for residential, by the way, is higher than it is for CMHC, so this would actually be 4.75-ish. Monthly payments 2977. We're doing property management again because we're keeping it the same across the board. So if you were to get rid of that, it'd still be just about negative 165. But all in, yeah, negative $465 per month versus $1826 per month for the MLI Select approach. Now again, you're more cash in the deal, and you have 50 years worth of debt versus 25 we're using here. So let's scroll down a little bit. Here's a recap. Traditional investment, $62,340 saved in upfront cash. Debt amount is only $564,000, so you're not carrying a large amount of debt. You own 1 rental property, which is only 2 rental doors, so not as appealing there. Your monthly cash flow is negative $465. Now, just so you know, that's still not a terrible investment, right? Just because you're seeing negative cash flow, the whole point is equity over 10 years, which I'm going to show you throughout this video as well, not just short-term cash flow, but what is your actual equity in both situations in 10 years. So your MLI investment, again, $62,000 more, debt amounts 2.74 or 54, so that's negative. But then you own 4 rental properties at 8 doors. Monthly cash flow is $1826 per month versus negative $465. So clearly, a little bit more upfront, longer debt, more debt, but a lot more cash flow. Now, let's look at the long-term scenario. So we're going to look at a 10-year return with an annual market growth rate of 4%. So we need to consider the appreciation of the property values and the reduction in the mortgage balances due to payments. So this is you paying off your mortgage every single month. Additionally, in the MLI Select approach, we're going to factor in the reinvestment of the cash flow into your mortgage. So I'm going to assume the $1,800 per month that we're making in cash flow, we're putting back into the mortgage payments for this calculation. Now, this could be a little more financial number based, but I think that's important to show where we're getting the numbers from. So I'm going to go line by line here. Let's see. All right. Traditional investment, 1 duplex. Property appreciation. So annual growth rate, 4%. Future value in 10 years is what we're trying to find. What is the future value of this property going to be in 10 years? So at $705,000 is the initial value times 1 plus the interest rate to the power of 10. So that's how you calculate the future value. We'll give you $1,043,000. I added a number here, but ignore that. So the mortgage after, so yeah, $1,043,541. So mortgage balance after 10 years. So using a mortgage calculator, after 10 years of payments on the 25-year mortgage at 4%, the remaining balance would be approximately $408,000. Then to find your equity in 10 years, so equity is the future value minus the remaining mortgage balance. So your equity equals $635,541. Again, an extra one. So yeah, $635,541 is your equity in 10 years, which is great. That's an awesome investment. You've been spending essentially out of pocket $400 per month extra to cover that mortgage payment. Very worth it in my opinion, and after 10 years you have $635,000 equity in the project. Now, that's solid. Let's take a look at what happens with the MLI with a 50-year mortgage. So for the MLI Select investment, property appreciation, 4% future value in 10 years, same calculation. We're going to do 2.82, which is the purchase price, times 1 plus 0.04 to the power of 10. So that gives you 4.174,164,000 is the price in 10 years with 4% appreciation. Now the mortgage balance after 10 years, let's take a look at that, because you're obviously a 50-year mortgage here. So using the mortgage calculator, after 10 years of payments on a 50-year mortgage at 4%, the remaining balance is approximately 2.4 million. So you've only paid off about 400,000 there. However, we've reinvested the monthly cash flow, as I mentioned. So with that consideration, the monthly cash flow, 1826, annual reinvestments times 12, 21,912. So assuming the reinvestment amount at the same growth rate of 4%, the future value of reinvested cash over 10 years can be calculated using the future value of annuity formula. So again, this is a little more technical for commercial real estate, but again, shows where we're getting the numbers from. So future value equals 263,000 on your payments. So your 21,000, 10 years, 4% appreciation, 263,000. So the total equity in 10 years, equity equals the property appreciation, equity from property appreciation is future value minus the remaining mortgage balance. So that gives us the future value of 4.174 million minus 2.4, which was your mortgage balance. And then we are going to add in that reinvested cash of $263,000. So your total equity is $2,037,164. So this is how much you could sell your property for, essentially, if the market goes up 4% in 10 years' time. Now, this is what makes it such an amazing investment and opportunity to me. Again, let's show the comparison here. So, as a summary, the traditional investment, you're paying negative $465 per month in cash flow. So approximately $635,000 and $541, or $635,541 in equity after 10 years, which is still a great long-term investment. However, the MLI Select investment, you have to pay an extra $62,340 in upfront cash. However, you can add some of these payments to your mortgage amount, but it will increase the project price, therefore lowering your monthly payment. But if you don't want to pay that full $62,000 upfront, builders can increase that as soft costs, pay the payments for you, and there's a way to do it legally and properly, which will then just increase the purchase price and increase your mortgage amount. But over 50 years, it'll be a very minor difference. Anyways, approximately $2,037,164 in equity after 10 years, including your reinvested cash. So you're paying $62,000 more, but you're making $1.4 million more. To me, that's an extremely worth it investment. Of course, putting another $62,000 down is no joke. That's still $62,000. But if you can find that cash up front, then that is why MLI Select is such a great short term for cash, because you're not paying anything monthly. Just again, that upfront, which is usually staggered, so 2.5% and then 2.5% in another 3 or 4 months, plus fees. Yeah, so there's a side-by-side comparison. Again, the rental market has gone down a little bit, so these prices and returns will be a little bit lower. But again, over 10 years, it'll go up, it'll go down, it'll fluctuate. That is the way of the market. But with 1,800 of room, you should always be at least break even plus for your mortgage. That's one of the beautiful things about the MLI Select and having that 5% deposit and the 50-year mortgage. So yeah, let me know if you guys have any other questions. If you do want some actual projects, you can reach out to me directly. My information is below in this video. Happy to help, and we have tons of different inventory in Edmonton and as well as Calgary. A lot easier to be cash flow positive in Edmonton, of course, but there are still some ways in Calgary as well. So yeah, thanks so much.